we are looking at support and resistance. I skipped this pattern trading because there are lots and lots of pattern I will have to be showing you. So let's just go to the shorter ones. Let's use the shorter ones, the support and resistance. So now this is basically how to do a support and resistance trading. Now I want you all to go to this particular place here, the right candle. Click on it. So click on this particular icon. Sorry, you see when you drop down this particular bar, you are going to see line and you are going to see candle. So I told you in the previous video, make sure you have these two favorites. Click this and mark it as your favorite. So please, we are going to convert. You can see I'm switching from candle to line. So please go to line chart. Make sure you switch to the line chart. Go to monthly. So when you go to monthly, this is basically what you need to do. So you can see, just right click, reset your chart. So you can see, basically you can see lines running through like this. So I'm going to be teaching, these are monthlies. SR stand for support and resistance. So I'm going to be hiding all this on my object tree. I'm going to click on the object tree and make sure I hide all these charts. Okay, let me just hide everything and my charts. Just click on control, or let's hold, okay, let's click then hold shift. So let me go down once I hide all the return cards. So we are going to hide what is on our chart. So this is basically how it come about our support and resistance line. So I'm going to pick this particular tool. This is the horizontal line. Let me see. You know, I favorite it. When you make anything your favorite, it appears on this column in your trading view chart. So we are going to pick rectangular horizontal line. Here it is. You can see, you just open this menu, you can see your trend lines and other lines. So you pick your horizontal lines. Now you're going to look for
where the party begins.
Points on the monthly time frame that coincide with each other. Like, this is what I mean. When you are going to look for points where there is a touch up above here, and there's a touch up above here. What am I doing? So let me use the arrow to show you what I mean. So there is a touch on the line. You are going to draw the line in at any position where you see, you can see the candle, the line chart, like touch the line, and then also beneath there is also another touch. I don't know if you get what I'm saying. So you can see here, this particular point here, let me use a lighter arrow. You can see that the line touched here. The edge, the line just print an edge on the line, on this horizontal line, you can see here. And then there's another touch here as well from above. So anytime you see this particular thing, this is where you are going to drop your horizontal line, and that your horizontal line is going to be your monthly support and resistance. Now you touch your horizontal line and you can add the text monthly SR, that's support resistance line. So this is what it is. So let me just quickly delete this arrow. So this is our monthly support and resistance line. Let's pick the horizontal tool again, then move up. Let's look for that point where we can see the top we have the top and the bottom touching each other. Let's go down. I can see something here. So yes, we have another one here. You can see there is a touch from the top here, this particular place. There is a touch from the top. From the bottom, sorry, there is a touch. The bottom part draws up and touch the line, and there's also a touch from the top here. Sorry, here. So these are the two touch. We call it the two touch rule. A touch from the top and a touch from the bottom. So this is a two touch rule. So we label it as well as our monthly support and resistance. So when you click on it, you type the text monthly SR. So you keep doing it until you move.
Cyrobeats.com.
You are going to make sure you use where price is recently. So I don't want you to go back and forth. Don't go back. Just when marking your monthly SR, make sure you use where price is currently. So you can see this is where price is currently. Make sure you are close within the range of where price is. Don't move back in time and start marking your monthly support and resistance. So we mark again. You keep looking. Definitely there are a lot of points that obey the two touch rule. So look at here. Look at this particular point. Let me see.
Cyrobeats.com.
So this particular point. So look at this particular point. I don't know, you can pause the video and check if you observe two touch rules. So you can see there's a touch here, current price. There's a touch here, and as well there's a touch here. So I know some of you were wondering there's also a structure, but it's not necessary. Why we mark book points is as a result of two touches. As long as you have two perfect touches, that's what you are going to use. So these are not perfect touches. You can see that the line protrudes above this horizontal line. So this is more perfect. So I use it for the two touch. So this is how you keep on doing it. You click the line, you type monthly SR as well. So you keep on doing this. Make sure you mark lot of points that has this. But please take note, make sure you don't congest this line. Now when you congest this line, you are going to have lot of monthly SR, and this will confuse you doing trading. So make sure you space out, make sure there is space in your monthly SR. So now that you have your monthly support and resistance marked on your monthly time frame, now you are going to go back to candlesticks. Switch back to candle. You can see anytime markets touch the monthly support and resistance line, you can often see rejection. Look here, you can see the market touch this monthly SR. You can see that the market moves downward. Likewise here, the market touch a monthly support and resistance line and then comes downward. So you can observe that frequently, and believe me, if you know how to trade your monthly support and resistance line, you can also make lots and lots of money from trading using this technical analysis. So go back to the 4-hour time
where
frame.
the party begins.
So leave the monthly time frame. So you can see the monthly support and resistance line. Let me just delete this. You can see the monthly support and resistance line. Well, you'll be able to reduce the chart, so you can see the various monthly support and resistance line. You drop So let's check levels where price respected this monthly support and resistance line. So you can see, look here, markets touch the monthly support and resistance line. Can you observe this big upward movement? So you can observe, if you are trading this particular with this particular strategy, this is your time for entry. So once market touch here, make sure you buy the market, buy the week. So it's basically very, very simple. And another important concept I'm going to tell you, make sure you always lock your monthly support and resistance line, because you don't want to have, or you don't want this line to move. When this line moves, your technical analysis is wrong. So make sure you lock your monthly support and resistance line so that it won't be able to move. You can't be able to move the line, so that when market test that particular position, you'll be sure to buy. Now when you move this monthly support and resistance line, let's say you don't lock it and then it moves, you might experience fake out. Market might touch a particular level which is not your monthly support and resistance and you buy, whereas market was trying to run towards monthly support and resistance level. In this way, you will experience losses and you will be frustrated. So make sure you do the right thing. Always lock your monthly support and resistance line so that you will know the exact level price is going to.
So moving on to the next lesson, we are going to be studying the various candlestick pattern. As you can see in my laptop, I've already drafted out the various candlestick pattern that you need in order to get more wins in the trading journey, your trading journey. As you can see here, we have first one we have is a double top. You can see what the price is. The price went up, touches this particular point, comes down again and return back to that exact point before dropping down. Now when are we supposed to enter this trade? As you can see, we are not expected to, just as we see this double top, just enter the trade. No, we are going to wait until it breaks this neckline before we can be able to say yes, this is now a safe trade to take. So our stop loss will be here and our TP will be at that point. So as you can see, it is formed during an uptrend. It is during an uptrend we can see double top. And the type of signal is showing you that there is going to be a reversal signal. As you can see, we are trending upward. And as we are trending upward, we are reversing. The market is reversing back to downtrend. So this kind of type of signal is a reversal signal, and the next move is downward movement. We also have the double bottom, the same thing. This one occur in a downtrend when we are trending, when we are going bearish, downtrend, when we are going down, when we are trending down. So, and what type of signal is this? Also reversal signal. As you can see, as the market, sorry that my laptop is not, I know I snipped this, that was why. So as it hit this, is just like something like this. As it hit this point, that point again, it started coming up back. And what did we see here? We are trending upward. Let's break this neckline, then we enter our trade and keep our target here. So the next thing is the head and shoulder. We have what we call head and shoulder. Market normally forms this, where you see market move up, create, this is the shoulder, first create a first shoulder, then create the head, then create another shoulder before trending downward. So as you can see, we call this head and shoulder. It occurs during an uptrend, and it's also a reversal signal, and the next move is what? Downward movement. The same thing with this one. We are not expected to enter this market anytime we just see this head and shoulder. We have to wait till the market break this neckline before we can say yes, it is safe to enter this market. So keep our stop loss here and our TPA. We also have the inverse head and shoulder, which occur during a downtrend. As we are trending downward, we can see this market making two shoulder and a head, then before taking up. So you can see it is a reversal signal. The same thing, we are trending downward and it reverses to uptrend. So it's called the reversal signal, and the next move we are expecting is up movement, and this will be our entry position, this will be our target, and this will be our stop loss. We also have what we call the rising wedge. The rising wedge. We have discussed about trend line. So you pick your trend line, you draw, you mark these points, you mark these points also. Now anytime you see market forming lower, this we call this lower low, lower high. You're seeing this lower low, lower high in this small space we have created. We refer to this as what we call rising wedge. This is called the rising wedge. It occurs in a downtrend. You can see we are trending downward. We are trending downward. That was when we experienced this side wedge. And what happened anytime market do this? It shows that we are going to continue in this downward movement. So that is the signal, continuation signal. And this is in a downtrend, so we are trending down. So anytime you see a rising wedge, it means that the downtrend is still going to take place. So we have a falling wedge. I've discussed rising wedge. Now we have falling wedge. This falling wedge occurs when we are trending upward. You can see upward. The same thing occurs in our uptrend. It's a continuation signal that we are going to continue up. It's like I said, it's an uptrend. It's an uptrend showing you that this is showing that we are going to go more up. We are going to move bullish. We are going to continue bullish. And this is where we are to enter the trade. I forgot to tell you, anytime the market break this wedge, we are safe to enter this trade, keeping our TP and our stop loss at this particular area. So we also have the falling wedge. The falling wedge. Oh, sorry, yes, we have another what we call the falling wedge, but this one occurs in a downtrend. This falling wedge occurs in an uptrend, and there is also a falling wedge that also occurs in a downtrend movement. You can see the type of signal we're expecting here is reversal. There will be reversal. The market will shift. So if we are trending downward, and market start forming this falling wedge, unlike the rising wedge we are expecting the market to continue trending downward. But in this falling wedge, here you can see that the market changes the direction. It now reverses to form uptrend, start forming higher high and higher low. And you see that the next move we're expecting is what? Uptrend. That is the next move. And we are to wait till the market break this pattern before we are safe to enter this particular market. So we have the bearish rectangle. You can see we are trending downward. Our market started consolidating. I've taught you about consolidation before. So once market break this consolidation, that means we are safe to take this trade. If it's in essence, what the smart money traders are doing is that they are gathering orders at this particular region. We are going to discuss that in our subsequent videos. So they are gathering orders. So anytime you see market doing this, just pick up your rectangle and mark out this pattern and wait for the price to break this region before you can enter this market. But this is the bearish rectangle. I think we have done justice to that. We have the bearish pennant. You can see the market is trending downward. Now, the difference between the bearish pennant
where the
and
party
the
begins.
rising and falling, the falling wedge is that in the bearish pennant, the number of lower lows and lower high form are not much than in the rising and falling wedge. You can see that in the higher highs, the lower lows form is very, very small. And you can see that the bearish pennant is even more smaller than the falling wedge. So what do we see? This occurred during downtrend, and it is a continuation signal telling us that market will continue to move downward. And the next move we're expecting is see a downward movement. So wait till it break this pattern before we can be able to take this particular trade. Then we have the bullish pennant, bearish. I told you, anytime you hear the word bearish, it means we are moving downward. Bullish means we are going up. The market is moving up. That means we're buying the bullish and we're selling the bearish. So the same thing with the bullish pennant. It is an uptrend. It occurred during an uptrend. It is a continuation signal, and we are going to trend up. So we have the symmetrical triangle. You can also see the symmetrical triangle. Now, the difference between the, what are they calling it? The wedge, falling wedge, and this symmetrical triangle is that in the symmetrical triangle, we don't know our next targets. We don't know whether the market is going to go up or the market is going to go down. So what we are going to do is we are just going to wait and observe what the market is doing. As you can see in this chart, the market is about to break this symmetrical triangle. So you see, as you can see, it occurs either in an uptrend or a downtrend movement. It can be a continuation or a reversal signal, and the market can move up or down. So that is the next target we're expecting, can be up or down. So we are going to just observe the market. Anytime we see this symmetrical triangle, it forms many higher highs and higher lows, or lower lows and lower highs than the falling wedge and the rising wedge. So we are just going to watch and observe what the market is doing anytime we spot a symmetrical triangle. So we have descending triangle. We have what we call descending triangle. You can see this one occurred during downtrend. You can see that we have from lower low, lower high, lower low, lower high, and so on and so forth. The same thing with this. We don't know the next step the market is about to take. So we are just going to watch and observe. If the market breaks in a downward movement, then we know that definitely we are continuing in our downward movement. But if it shoots up, that means we are going bullish. Then we have the ascending triangle. As you can see, it occurs in an uptrend. It can also be a continuation or a reversal signal, and we can move up or down. And so that is it about pattern trading. We also have what we call the bullish strip information. This helps us while we are trading. Anytime you see a bullish, that means downtrend, bullish strip information, that means we are going to change direction to an uptrend. That means the market will start moving up. You can see this is a bullish candle, bearish candle, sorry. This is a bearish candle. This is a bearish candle. This is two bullish candle. So anytime you hear bullish stripping, that means we are coming from a downtrend, and the market is reversing back to an uptrend. The same thing with this bearish stripping formation. We are coming from an uptrend, and the market is changing its direction back to a downtrend.